Hey guys, what is up? It's Dusty here, and welcome back to another episode of the Daily Crypto News. And today, I have a warning for you all. And that is actually because some news from the Fed just came out that I honestly think will not have too much of an effect on crypto in the short term, but the consequences of this decision could be very bad. And I want to explain to you guys exactly why and exactly what that means. Should it be bad for crypto? No. Is it going to be bad for crypto? Well, I'll tell you guys exactly what my thoughts on that subject are, but just want to warn you guys and prepare you for everything that can happen. So whatever scenario comes up, you're prepared, know what to do, and hopefully can make the most amount of money out of it. You guys already know, all right? We don't fud around here. What we do is think rationally and think about what the best choices are for ourselves in the crypto space, because it's a dangerous space out there. It's pretty easy to lose money, but then again, as long as you don't sell, you don't lose money, right? Right? Yeah. But we have a lot of cool stuff coming up in this video. So first of all, just taking a small little look over at the crypto price. Oh, by the way, I just moved my entire... There we go. All right, perfect. I wanted to say, if we take a look at the entire crypto market here, one thing that becomes quite apparent is right over here on the Bitcoin and S&P chart is that they were actually performing rather similar up until a later point in time. You can see here at about 8 p.m. still it was basically performing in the exact same manner for these, I guess, couple of minutes or so going forward, except for, I guess, from this point on forward at about 9:45 p.m. when things all of a sudden turn around. And the only real explanation that we can kind of give for that is that Bitcoin most likely just got caught up inside that little negative momentum that we had from before that. Because even if we're just zooming out for Bitcoin or anything like that, it really doesn't make a lot of sense for it to move without Uniswap. But what just happened? Well, the Fed is getting ready for some interest rate changes. And so as of this point, the only news that came out is that the Federal Reserve is not going to be changing the interest rates. That's what everybody's been going rampant about over on Twitter. You can see here, Justin, Federal Reserve votes to leave interest rates unchanged and hints at a possible interest rate hike in March. I think we have it twice. Breaking, the Fed votes to leave interest rates unchanged, and I also tweeted the exact same thing out to everybody over on Twitter. If you're not following me yet, make sure you follow me over on Twitter, TheDustTBC, and I've been also posting a couple of memes as well. Things are rather strange right now for this exact reason. Because what does this mean and why am I warning everybody? Well, as of this point, right, what happens when the interest rates change? You don't know? Let me explain. The interest rates usually change following, for example, inflation, or it's usually done for some sort of economic incentive, depending on whether or not the interest rates go up or go down. Let me go into full screen here for a little second. Then we can explain it a little bit better with the full screen mode. All right. So the thing about interest rates is, right, the higher they are, the less incentivized people are to spend because it basically makes the cost of capital higher. If you all of a sudden want to go for a $1 million project and you want to borrow for that, if you want to make some new houses, for example, it's all of a sudden going to become a lot more expensive to do so. And also if you are basically I don't know the exact word in English, I guess a lot changes to the propensity to consume, but let me actually rephrase that a little bit. What basically changes is that you would rather have your money in a savings account right now to spend your money later because the interest rate is so high, instead of basically spending it now when the interest rate is basically low. Right now, you're being incentivized too much to save up your money and not really spend. And the circle that kind of comes with that is that things, in terms of prices, come back down. And so it counters inflation, which I guess is nice, but also it counters economic innovation, which is not really what we want to see in times like this. And that's why, for example, guys like Trump were really for heavy interest rate cuts. Because generally speaking, when you cut the interest rate, what happens is that the market goes in a spiral towards the upside. Only works for positive interest rates. Once they're already negative, like in Europe, things change a little bit. Even when they're at zero, things work a little bit differently as well. But generally speaking, let's say it's at 2%, 2.25%, 2.25%, and they lower it by a fourth or whatever. In theory, right, they're more incentivized now to go spend. They're less incentivized to go save. Because generally speaking, the cost of money has become less. So let's actually show that in a critical example here, because I believe I have an article from Trump from back then. Let's quickly check this out. Did I not open the article up? I might have not opened up the article because I'm a little bit stupid sometimes. I have it on my phone though, guys. Give me like 5 seconds. I've been preparing for this. All right, let me just quickly go grab it here. Give me like 5 seconds and we'll have it open. I'm not exactly sure what just happened then or why I closed it by accident. Or I might just have it open but in a different tab. But let me show you guys. All right, here we go. There we go. That should be good. Can you guys still see me? Yeah, we're all good to go. All right, so this is an article from a while ago, 2019. Donald Trump rages against the Federal Reserve as it cuts interest rates by 0.25%, but signals it won't slash them more as he has demanded in move, which sends shares plunging. What happened here was that the Federal Reserve did cut the rates a couple years ago for incentivization, basically for the markets. By the way, some of you guys said, please put your microphone louder. I've been looking into that. Test, 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 test. But I'm not really sure if, what thing is good. A lot of people are saying different things, so I'm a little bit confused about that. So what they basically did was they cut the rates, but not to a point where people were really satisfied because it was only 0.25% when Trump was really advocating for some severe cuts. Because what, again, you get is that if you, for example, want to build your hotel branches out, all of a sudden it becomes a lot cheaper to do so, and so you're more incentivized, which is generally speaking a good stimulus for the economy. And what just happened here, guys, is they said, well, we're going to keep it at zero, which basically means to fight this inflation, which has to come, right? That's, again, the result for right now, what just happened. They have to eventually cut the rates or do something with it, right? Up the rates, do something in some way, shape, or form. They have to change something. And depending on what they do, the market can react quite heavily to it because they kept it at zero as of this point. And keeping it at zero, I think, is like the scariest thing because it's a short-term sort of stimulus. But long-term, it just gets way scarier because you're basically ignoring the problem. That's also why I was posting a lot of memes about Jerome here because, well, just saying, let's do nothing is, I think, even scarier than whatever they decided to do. The Fed is getting ready to raise interest rates. Federal Reserve expected to signal March interest rate hike with more to come. Fed says U.S. interest rates could rise soon. But the rest you get, right? And so another real small thing I should mention is that this, in 2019, was basically said by Trump to kind of be on par with what China was doing, right? To incentivize the economy. Then, of course, the CV-19 thing hit, and they basically took the entire world by surprise a little bit. But right now, they want to incentivize the economy as much as possible to thrive. Yet, it's all such a false reality, basically, in the sense that right now, everything is on the up and up. S&P doing amazing, NASDAQ was doing amazing and whatnot. When in reality, it shouldn't because the economy wasn't in that great a position. And so right now, they're going to de-incentivize people to spend and basically make things worse for the economy when theoretically speaking, the economy wasn't really doing so good already. So it's basically going to go in a really negative spiral that a lot of people don't want, which is why it's so scary, which is why I should be so wary of this. Now, without me rambling on for 1,000 hours still, what do we do? Well, in theory here, it's going to be another 2 months at least before we get the next decision. I'm going to say March is when we get the next decision from the Fed. And we are expecting that at that point, in the same sense that they did not hide the inflation this year, usually in the CPI numbers, they do hide inflation because what that basically measures is the cost of goods of a specific basket in a specific year. And usually they make it in a certain low point because they replace some goods and do some shenanigans with that. This time around they didn't. It showcased that all the prices were basically 7% higher than the year before. I'm also assuming that this time around they're going to not play around too much with the interest rate in the sense that they're not going to try to keep it as low as possible or try to kind of make it work. No, I think they're actually going to go for it in a heavy manner. And this is actually going to continue on throughout the next year or so. They're going to keep this up, meaning it's going to be, theoretically speaking, bad for the stock market because people are being de-incentivized. Stock market goes down in price, most likely. Housing market most likely goes worse. A lot of markets in that sense do worse, generally speaking. And since Bitcoin has, well, for a long time been one-to-one with the stock market, we've kind of showcased that a couple of times here. Right now, it's going a little bit on its own, which is rather strange. I'm not exactly sure why that was the case. You can still see it here a little bit. It's strange how that's performing in this fashion right now. It's been following it along for most of the time. People like I are wondering, well, when is this going to basically stop? When is the correlation going to end in the sense that Bitcoin is just going to, again, do whatever it decides to do based on the contradictory of what the stock market is doing? And I'm going to say either is fine, right? So either no correlation or some inverse correlation. I think they would both be fine. But right now, the one-ish correlation, I don't really like what we're seeing here. I guess I can't say one because it's not that severe, but it's still pretty damn high. So right now we have to be careful that the Bitcoin doesn't follow the stock market, as the stock market, generally speaking, should go down because of anticipation of what's going to happen in March. Then again, we'll have to see in March because people anticipated that this speech was already going to take things down. And since that didn't, things are even more confusing right now. And that's, again, where the money is being lost, so to speak. Stock market right now, in terms of numbers, stock market's already down, of course, or I should say closed. In terms of nominals here, it's actually down, generally speaking. I think tomorrow is going to be a down day as well after news like this because people really weren't happy with it. Why? Even though for right now it's a positive result, longer term is worse, right? Because you're just hiding the problem, basically. So people wanted them to start it up. Then again, people like Trump are just saying, nope, just basically ignore the problem, keep the spending going, help the economy out, don't fall for it. And so from that side, it's a positive thing for the stock market. So it's hard to say, hard to measure. But now you guys know the situation about that. So it's a really fearful situation, really scary. We don't know how the crypto market is going to react because, well, a lot of manipulation is going on by some stock behemoths, I'm guessing. Right now, there's quite a lot of talks out there in the interwebs as well about ETFs of all the sorts. I've actually been posting quite a lot of articles about that. I'm also seeing a lot of FUD out there of a crypto winter is coming, for example, stuff like that. It is mostly based upon the fact that things can crash like we've seen before. That's also something you should keep in your mind. Even though I'm extremely bullish on crypto, I'm holding through everything thick and thin. I do keep in mind that there could be a bigger crash because of the economy, right? If the economy crashes all the way, it could be that people have such low faith in these investments that all of a sudden they don't want to go for crypto anymore either. We don't know what the bigger money is in crypto. Is it the real decentralized nation, or is it really the bigger behemoths in stocks that are also investing into crypto that are manipulating it all the way? I guess the latter speaks a very big part in it, right? But I don't know exactly where my articles were about all the ETF talk, but basically there's quite a lot going on in the ETF realm. I think I have it open in like some different articles somewhere in here, man. But where would it be? I have so much stuff open today, guys. I really have so much stuff open. That's why. That's why I think it's being lost right now. But just hear me out when I say that there's right now a lot of talks about these ETFs. So I think what did we read now? I think the mining ETF, it just went live. That was one part of it. There was more for ETFs, but I kind of forgot what it was about. And then I saw this article as well. What's today's Fed decision and what could it mean for crypto? Well, their story here, you can read it for yourself if you want to. But I think they're going to come to the exact same conclusion of, well, it depends a little bit on what's going to happen because there was a huge amount of inflation. So the rates should, theoretically speaking, go up. We're fighting a battle that we've not seen since 2008. But the Fed previously said its plans 3 rate hikes this year in response to rising inflation and an incredibly tight job market. Goldman Sachs, which again has no authority, look up their scandals if you want to, apparently seeing even more pressure ahead, predicts 4 to 7 hikes, I believe, or was that JP Morgan? I don't remember, with rates rising to 2.5 to 2.75% by 2024. The FOMC could provide more clarity on that schedule today. Yeah. It's going to be an interesting couple of months, guys. It's going to be a very interesting couple of months. What's going to happen? So, again, if you want to know exactly what you should do, very difficult. Not financial advice at the end of the day, you guys all know. But it's also because we don't know how these guys are going to react. A lot of people are saying, oh, this was the most important meeting. Yes, but no. It turned out to be a very important meeting to set a baseline. But with the decision that they've made, they're basically hidden so much that we don't know what the next step is going to be. We don't know if they're actually going to do any crazy stuff next time. But we are assuming that, again, we are expecting very heavy interest rate hikes coming up in the future, which stocks will most likely react negatively to. And the chance is there that Bitcoin is going to also crash along with the stocks because the entire market is collapsing a little bit. Then again, that doesn't have to stay that way. And Bitcoin can also pick up the inverse correlation because, well, if the economy is collapsing, Bitcoin should thrive and prosper. So it just depends on how heavily manipulated the market is, if you ask me. All right, and then I had just one small part about Ripple. Ripple CEO won't apologize for taking on the SEC. You got to remember, guys, a lot of people ask me if I'm still bullish on XRP. Man, do I even have to answer that question? Whenever I check the comment section, it's one of the things I see quite often. People asking me about XRP or why I'm so excited, why I talk about it so much. I think it's honestly because it's the most, in my own non-financial advice way, the most guaranteed success story in crypto. I think it's going to be the first properly regulated crypto. And I also kind of assume that it's going to end this year with a positive result, and that's going to make us some juicy gains. Is it going to happen? I don't know. You know, I can't see the future in that sense, but I am expecting it to be that way. So, yeah, that's the long story short about it, guys. That's the long story short. Be warned. Don't go FOMO out. Don't go FOMO in. Don't do anything crazy. Don't do anything that I wouldn't do. What I would do is carefully watch, see how the correlation between Bitcoin and the stock market plays out. And as we get closer, I'll make more updates about it to see and kind of update you guys on what I'm thinking. But as of this point, we're staying neutral. I'm just buying my altcoins in the way that I thought we should do. And we're not basically selling everything to wait for 3 months, yada, yada, no. Because we could actually see a very big Bitcoin pump over the next couple of weeks here still. And it might not even be affected by March. I don't want to take that gamble. But now you heard what I had to say. So, yeah. That was it. Make sure you press the like button. Make sure you subscribe. Adios, amigos.